I switched off the mic. So here we're gonna start in about 3 minutes. I'll start in about 3 minutes. So today I'm not gonna waste your time. I'm just gonna go straight to the point and just show you how I actually do it and how I actually trade the markets. Okay, let me first check if we. Okay, let me do a live test real quick before I can actually go ahead and assume that you guys can hear me. So I'm just gonna do a live mic check right now correctly. Okay, let me do that. Starting up in 3 minutes. Real quick before I can actually go ahead and assume you guys can hear me. So I'm just gonna do. Alright, so I think it's fine. The I think the mic thing is great. It's fine. We're just gonna leave it like that. So what are we actually looking at here today is we're gonna be looking at gold. We're gonna be looking at Nasdaq. We're gonna be looking at US 100, and I don't usually trade currencies, so we're not gonna look into that. But I'm gonna show you how I actually trade gold in real time. Um, how I actually trade Nasdaq, how I actually trade USDT, and how I use USDT as a correlation to take trades on Nasdaq. So without wasting any time, right? Okay, let me just. Okay, so no, does it? It's okay, it's okay. Okay, so let's get into it. So what are we actually gonna start off by doing here? Okay, let me switch off this thing because just blinded me. So we're gonna start looking at this chart, right? So what are we actually looking for in this chart? It's simple, guys. It's simple, like really simple. What are we looking for here is the highs and the lows, right? That's the simplest thing. Okay, so we're gonna start off using the 15-minute charts, but we can use because we actually trading inside the window of of daily, right? So it doesn't matter even if like it doesn't. Okay, let me switch off this thing, right? So that like it cannot. So what are we gonna start off looking at is Nasdaq, on how Nasdaq moved during the Friday session, right? Okay, let me just delete all these things so that like I can just see it in real time. So what I was actually anticipating here, because we had this low, right? We had this low here, and we had these on the previous day, right? Which needed to be crashed before the market can start selling, right? What does the market do in simple terms, right? The market moves like this. This is a candlestick. So this is okay. I'm not sure if I can draw this thing perfectly, but okay, no, I cannot draw it. Let me just do it like this. Okay, so this is the formation of a candlestick, right? So the candlestick move like this. It's just simple, man. So how does the candlestick move? The candlestick moves like this. This is the open, right? If it's gonna go lower, right? If it's going lower, this is gonna be the open. This is gonna be our open. What is it gonna do? It's gonna move higher. Then what do we consider this part? We're gonna consider this part as manipulation. We're gonna consider that part as manipulation. So I was expecting here, I was expecting the price to go higher so that like it can drop lower, right? So that like it can drop lower. So going back to this candlestick formation type of thing, right? Type of example. Okay, wait, what's going on? So the market opens here. We're using New York time. You're gonna set your time zone to -4. So we're gonna use New York so that like you can actually get and benefit from all these all these examples, right? Because if you're using a different time zone, then you're not gonna see it in real time. You're not gonna be able to understand what I'm trying to enlighten or what I'm trying to teach here, because you're not gonna be fully aligned with the time structure that I use, because this model is strictly time based. So okay, looking at it, going back to it, how is it like? Okay, so it's simple, right? As I explained that the candlesticks move like this. This is gonna be our open. This is gonna be our high. This is the highest the market has went during a specific day, because this candlestick represent the whole day, right? It's represent the whole daily type of thing. Okay, let me just use this power of three candlestick. I'm not sure if I'm gonna. Okay, wait. Okay. Anyone who has a question, right, can just ask. Okay, let me just see if we have any questions in the chat. That's it, like we don't have any other questions, right? You're gonna use this here. So can you see this thing from this perspective, right? What is this? Okay, what's going on? Okay, so what is this, right? We have the opening here. We have this opening here. Then we have this wide gap. This is our high, right? So as this is our high, what were we expecting on this price action? We're definitely expecting the price to drop lower, because if you look on other candlesticks or on daily time frame, right, this is evidence that we actually on a bearish market, right? What are we actually looking to target? What are we actually targeting? We're targeting this low, because why? We have lower lows here, relative lower lows on these specific time frames, on these um here, right? So as we expecting the price to move lower, why should we be looking to buy this market, right, during these sessions? Why are we actually looking to buy this market? There's absolutely no reason why we should continue doing that, because it's really against the overall narrative on the notion that we're actually going lower, right? So let me just show you this thing. So we opened here, we went higher. This was our highest high of the day, right? Then what happened next? Then we went lower. So okay, let me show you the examples now, how I actually took the trades. Okay, let me just use this one because it's just so fast. Right. So what are we gonna? We're gonna start off by mapping um where is the opening price? Okay, wait, what's going on? Okay, this is one. This is half past one. This is, you see, from here, this is our opening, right? We opened here, then we went lower, short term, then we went high. This is gonna be our manipulation. This is our manipulation side, right? We're gonna use this as a manipulation, right, to actually go lower, right? Okay, what are we actually looking for here? Because we already understand that we need to be going down, we need to be going lower, right? Because we actually on a bearish market. So what are we gonna do here to actually find the next exit or the next entry point, right? Obviously this is gonna be our exit point. This is gonna be our exit point. This is the lowest of the day. So what are we actually looking for if we're not gonna aim for the lowest of the day, right? Or we can actually aim for anything on this, on the previous day, right? We can aim for that. If like maybe we opened around here, then from that point then we went high, we could have aimed for that. But this is the lowest low, and looking at the time and understanding how time is very important in when you're trading this thing, right? So let's get on it. So we have these higher highs here, relative equal high, relative equal high, relative equal high. So how are we going to use that? How are we going to filter that into actually placing on the trade? We're going to use this thing, right? We're going to use this high because this is the highest we can get. Looking at the time, right? This was 9:30 in New York time. Remember when I said you need to be using New York time so that like you can actually understand these concepts and these examples, right? Because I'm actually using New York time to trade. So you're not gonna be able to like understand the whole thing if you're not gonna be using New York time. It's really pointless. I cannot be always uh what can we call this thing? Translating. I'm not gonna be always translating New York time to South African time because there's daylight saving time, and just switching it to New York just saves you a lot of time. So that's why I actually use New York. So we have this high here, this high here. Then we have these relative equal highs here. This is the previous session, right? Previous day session, right? I think it was around 1:30 to 4 when the market was closing, right? The market opens at 6 in New York time, then 6 p.m. in New York time, then it closes in 4 um, p.m. New York time. But then in South Africa, it closes around 11, then opens around 12 something. I'm not sure, but yeah, it's around that. So getting back to this example, right? So I'm actually trying to not waste time on this example, right? Because you understand what I'm actually looking for now. So we're gonna drop to lower time frame, which is gonna be I actually trade on 1 minute. Let's drop to 1 minute, just to make everything faster and so that like you can save time. So what's going on here? Remember that the equal high that we actually mapped, this is it, right? Remember the opening price, this is the opening price. So I'm just gonna remove this so that like you can see the whole thing. Then we're gonna be using time-based mode there, right? What are we gonna be looking at? We're gonna be starting from 8:30. 8:30. This is 8:30. What are we actually looking for between 8:30? This is the point where you actually trade. From 8:30, we trade from this point up until the close, right? We don't trade these, although it's nice trading this, but then we don't trade that. Because why are we not trading that? Because the price can be sometimes unpredictable because it's be before the New York open. How are we gonna trade the New York pair then and expect to use the London session? The London session, it's not proper. It's not proper. It's not giving like um enough it's not like giving proper stats or whatever I can call it, right? So what are we gonna look at here? We're gonna map from 8:30 then up until 16:45, right, which is 4:45 in New York. So what are we looking at here? We're looking for this high. We're gonna call this one a buy side liquidity. What is a buy side liquidity? Buy side liquidity. Oh, how can I best describe the buy side liquidity? Buy side liquidity is whereby the price taps into, what can I call it, liquidity? Oh my goodness, I think I'm clueless on that side. Okay, no, I'm just gonna do my research properly. Oh no, this is like crazy. Okay, so that's just like such a crazy thing to say. But okay, what a buy side liquidity? Buy side liquidity is whereby the market moves. Okay, you see this one. We can use this as a reference to buy side liquidity. I'm just gonna show you the example of what buy side liquidity is, according to my knowledge, right? According to how I actually learned what a buy side liquidity is. So a buy side liquidity is this point upside. What is the sell side liquidity? Because we have a buy side liquidity and a sell side liquidity. What is the sell side liquidity? The sell side liquidity is these points. So how can I best describe these points? It's whereby the market makes a higher high, right? The market makes a higher high, then drops immediately from that higher high. that high of that where the market actually dropped, we're gonna use that high as what? As our buy side liquidity, because we have stop we have buy stops resting above that high. So what the market is actually looking for, it's actually looking forward to crash those buy stops above, which is buy side liquidity. So what are we actually doing here? We're actually waiting for the price to take out the buy stops so that like we can enter the market, right? That's so simple. So we have this buy side liquidity here. Then we have what are we actually looking forward to do here? We are waiting for the price to crash this buy side liquidity and move higher. Crash this buy side liquidity and move higher, right? As it moving higher, what are we gonna do on this on this thing, right? This is the part where I say it's a manipulation. What is a manipulation? Remember when I told you about the power of trade, when I actually used that example of how the market moves and how the market start by moving higher, then start dropping midday, right? So this is the example, right? So we're gonna use this one as a manipulation. So we're gonna take opposite trades on this section, right? What are we gonna do? What are we doing here? It's simple, guys. It's really simple, right? Everyone has been buying. People are buying here, and they are not getting out. What are we gonna do here? Because we have swiped this buy side liquidity here. We're actually looking forward to sell this market because we have swept the buy side liquidity here. We have buy stops resting above here. So we're actually anticipating a move down. Remember when I said that the market start moving higher before it moves down, right? This is the prime example. This is how you actually get the get your entries right, right? This is it. Pay attention to this. This is the shortest you can get. The shortest I can get on this thing, right? So we have this here, which is manipulation side, right? What are we gonna do here? It's simple. We're gonna look for fair value cap. What is a fair value cap? Fair value gap is whereby the market leaves a gap here. What is a gap? Let me show you in real time. Let me show you the gap. This is the gap. You see, this is the gap. This is the gap. You see, how can we best identify the gap? It's simple, right? Let me show you. You see, this candle wick, the highest of it, and this candle wick, the lowest of it, does not touch, which means these candlestick does not touch, so they are not like okay. Okay, let me show you an example of what I'm actually saying here, because sometimes I think I struggle with finding fair value caps as well, because I was in well experienced with notice these things, right? So if there's no fair value cap, what can we expect? You see this candle wick, you see here, unfortunately we don't have any candle wick here. So we have this here, then we have this. Okay, let me just show you in a okay, what market? Okay, not in a okay, this is it. You see this candle wick, right? And this candle wick. Then we have this here, this candle wick, and this candle wick, this candle wick, and this candle wick, and this is. You see, there's no gap in between here, so the price is really balanced. If you can look upside here, what was it targeting? It was targeting these, because this one is it's not balanced, right? Because it had inefficiency inside that window, right? I'm just gonna focus on that. From now after this, we're gonna focus on gold, because I found a niche on gold. But wait until you see that before you can actually chat. So what do we have here? We have this level gap here. Unfortunately, went over it, closed below it, then went higher than that. If you could have entered here and put a stop above here, because what I actually advise all the time is put a stop on the high, right? So that like when you get stopped, you know that okay, the market is not gonna go there. because we have set the swept the liquidity there, so it was highly precise and highly possible that the price was going to drop lower, right? Even though we did not have a market structure shift. What is the market structure shift? That's a topic for another day. So right now I'm just gonna focus on how I actually find the entry, because if I focus on teaching everything, then it means I'm not gonna finish this video and it's gonna keep escalating and escalating. Then I'm gonna be teaching a lot of things in one video, right? So which is highly impossible. I'm just gonna show you how I actually find the trade and how I actually executed the trade. So what we have here, we have a 5 value gap, went over it, then came back. Then what do we have here? We have the same thing, a 5 value gap. This did it did come here, tapped it, then move lower. What do we have here between here? We have this, then we have this. What do we have between here? We have a 5 value gap. That's gonna be our entry, right? As long as you see a 5 value gap, that is your entry, bro. That is your entry. As long as the direction is correct, you understand that there's a manipulation and there's distribution. If you're gonna use the power of three, then you're gonna be always gonna be profitable, because you understand where the market is going. You need to understand what the market is reaching for and what the market is actually going for. Like, if you understand those things, you're never gonna go wrong on structure. If the market is going higher, ask yourself, what is it targeting there? Is there buy side liquidity? Is there relative equal highs? Is there new day opening gap? What's there? What's there to actually for the market to actually be interested in going high? Why would the market go higher? That should be your question every time when you say the price move. So what do we have here? We have this 5 value gap. Remember, our structure is actually we're gonna run that. Okay, I didn't see that. Oh, so from here, because we actually swept this buy side liquidity here, so we went high. This part is what they call manipulation, as I said, right? We have this entry here, our first entry, then we have this second entry, right? What do we have from this point? Okay, from this point you pause, you don't rush, you just don't rush. You put a fib on it, put a Fibonacci, put it like this. Then you're gonna use these levels, right? Okay, this is okay. Let me just set this on. Okay, I'm gonna use this one and send entry, because I've been trading for quite some time to understand what I need to see on the fib, right? So I'm gonna use, okay, I'm not gonna use this one. Yeah. Okay, yes, I'm gonna use this fib. So what do we have here? We have 50% retracement. So what does this mean, right? Because the price is too cheap now, this is discount, this is premium, right? What do we have? We're gonna sell the price at premium. Premium is over 5%, right? Which is over 50%, 0.5. This is over 50%. What do we have here? We have this 5 value gap, which we actually tapped and used to actually go lower, right? What do we have? We enter here another trade, that trade. You're not panicking. Then again, if you want to use precise entries, right, then you enter here, then you put this fib here. What do we have here? On 50%, what do we have? We have a 5 value gap. We have this I 5 value gap here. Are we gonna use this one? Yes, we can use it one, because it's above 50%. We can take another trade here. If you actually missed on this trade, you can take another trade here, going low, right? What is our initial target? Our initial target is here. Is this, as I just outlined earlier, that this was gonna be our initial target. So what happened is the price went higher, the price went low, then it went back to the 5 value gap, then went lower. What do we have here? Another 5 value gap, another 5 value gap. The price went higher to the 5 value gap, went lower, back to the fair value gap, went higher again, back to the fair value gap again, then went higher. Okay, I'm not gonna waste a lot of time on this and showing that, but I actually show you how I actually took an entry there. And okay, let me show you now, quick, how I actually take trades on on Nasdaq using S&P as a divergence, right? Okay, I'm trying to locate this thing. Okay, we're gonna use this one, right? We have S&P here, right? We have S&P here, then we have Nasdaq here. This is almost like the same chart, but then it's not the same chart. Don't be fooled, right? The S&P chart is more precise and cleaner, right? I actually use S&P to take trades, right? What do we have here? Can you say this, right? What do we have here? You see this point, right, which is 954, right? You can also see this one. This is 954. But then, if like you can see properly what we have here on the other side and what we have here, you can see that this chart does not actually look the same. Although it moves the same, but it does not look the same, right? It is influenced by the same time, but usually the US 500 create motion for you. Oh, this is the same chart actually. Wait, what's going on here? Oh, I was reviewing US 500 all along. Oh no, okay, but it's almost the same as Nasdaq. So I'm gonna show you. Okay, yes, I was on Nasdaq. Crazy. So what's going on here? You see here, this is 954, right? We have this here, which is 954 also. But if you can look at this chart, understand this chart. If you can look at this chart, you can probably see that it does not look almost the same, right? This one is better and cleaner, but this one is tidy. Why am I saying that? Because look, I want to show you a quick example, right? Look at this point. This is 936, right? Look at this point. This is 936. Look at this point. This is 1018, right? Look at this point. This is 1018. This is 1018. 1018 on S&P 500 is lower. What does this tells us? This tells us that we actually gonna go lower, right? Why? Because we have these market structure shifts here, which entails and understand and makes us understand that we actually changed the direction. We're no longer going higher, right? Yes, it's very important to understand this information because this is what you're gonna use now from now on, right? Okay, let me not get ahead of myself. So we have this low here. You can probably see here it's not crashed, but you can probably see here on S&P that it's crashed. All right, this shows and tells us that we actually gonna go lower, even on Nasdaq, even on when, right? We're gonna go lower, right? So what do we have here? We can also put a fib on it so that like we can actually get the sense of when we're gonna enter our position, right? You see, over 5%, over 50%, and we take the trade. It's simple, guys. For now, let me just give you this. Maybe on another session, maybe I'll just go in product details. I was just showing you how I actually took the trade here. Let's move to gold. Okay, first of all, before I do that, let me show you. Let me give you what we can expect on markets this week, right? Looking at the daily charts. I think this information is living rent free inside my head. So we have this low here, which we actually targeting on Nasdaq on the daily chart. We also have this low here. The last week actually, on the 9th of March, right, we actually crashed this low. If you can see perfectly, if you can look at the chart, you can see that we've been consolidating ever since when, actually, because this is such a, I think around November, because okay, around, yes, around November, we started around November, then we consolidated. It was this, I was active on the market that time. I was really, really, really active. I was doing it. I was in and out every single day, and I had a profit back then. That's how I actually lost the account, because it was it was impossible for me to actually understand where the price is going on these things, right? Because on another day, then we higher, then on another day we lower, going higher. Like, it was strictly impossible for me to actually predict where the market is going. I was still learning by that time, so that's why it was actually harder. So what we're actually gonna look at now is we're gonna look where the market is gonna go to. I think today the market is gonna drop here. When the market open, it's gonna open with the gap around here. If I'm not mistaken, it's not gonna be higher than this though. That's what I'm gonna tell you. It's not gonna be higher than this. And from that point, what are we actually targeting? We're targeting this. This is what we're targeting here. We're targeting this and beyond, right? For this week. Because why? This is 20 November, right? 2025. This is 2025. That's it. So we have this here, we have this low here, then we have this recent low here, which was created on the 9th of March last week. Actually, I'm not gonna say that last week, but we actually crashed this SSI liquidity down there. Then we had this buy side liquidity there, which is also crashed, right? So where the market is going, the market is gonna drop lower to this, to crash this before going higher, before attempting anything to go higher, right? So okay, you can guys, you can still see the stream, right? Okay, wait, let me set something. Hmm. Okay, so what are we actually looking for on Nasdaq? We're actually predicting that the price is gonna go lower, right? There's gonna be a gap. Um, the price with gap, it's gonna open around here, then it's gonna go lower. Then maybe on Tuesday, maybe can go higher to this fair value gap here, to this fair value gap. We can come to this, highly possible, but also don't take my word for it. Just go into the charts and see it for yourself. Okay, and this is it. I think the price is gonna gap, start here, then move lower to this suicide liquidity here. Then it's gonna start moving higher. Then after that, right? But then we're gonna look at the charts as the market opens, right? Okay, so we're gonna move to gold. We're gonna move to gold now. This is gold. This is what I have on gold. Simple, right? I'm not gonna remove these annotations because it's gonna save us a lot of time. What do I think? What's my viewpoint on gold? Starting off on a daily time frame, I think gold is gonna touch here. If it's not gonna touch there, then we're gonna touch this middle point right here. Okay, let me put this here. I'm not saying it's gonna touch here this week. No, don't get me wrong, guys. This is not being realistic. God is gonna touch this. It's gonna come here. Why am I saying that? Because the social liquidity here, resting below here, and also these relative equal highs, right? Equal lows, right? So they need to be crashed before the market can start running higher, right? And also taking into account that we have this world war going on right now, so I think it's really important for you to actually understand that gold can drop low. Gold can drop low also. So what do we have here? Let me move to 1 minute. Or why should I move to 1 minute? Okay, let me start off by moving to 15 minutes so that like I can actually see the whole thing. Yeah, I'm actually tired right now. Can't lie. And I cannot even see the comments here because I don't know what's going on. But let me see if I can see them now. Well, yes, I'm just yapping. So what do we have here? We have this here. Remember when I said that you should take into account the manipulative side of price action, right? What did we have? We have this, the market opened, then we have this low here, then the market went higher, then we had this high, which was minor buy side liquidity, then we had this here. Remember when I said the market is always targeting relative equal highs and relative equal lows, right? We had this here, and we also had this here. So these are relative equal highs, right? Yeah, I'm just tired, guys. Don't get me wrong. So then what happened is the price went higher, created a fair value gap here, then went lower, then we used this point as a market structure shift, right? Then we had this here. You see? You see how precise this thing is? This is 50% retracement, went high to the fair value gap, then what happened next? Went lower again, went lower. What do we have here? What do we have here? Simple, right? A simplest thing, right? So let's move to 1 minute. Just gonna remove this thing. Move to 1 minute. You gotta start looking at the charts from 3 a.m. This organism, as I said, I'm tired, guys. I'm really tired. I'm not even lying. What price action are we looking at, by the way? What? I don't remember. Let's just use this one, the Friday one, because it's the most recent. So what do we have here? I'm gonna show you this. What do we have here? On 4 a.m. to, where is this thing? This is 325. So from 325 to here, we have what? We have manipulation, right? Sometimes gold set the tone earlier compared to NAS because we're gonna start trading NAS after New York Open, right? This is what we call manipulation there. Then what do we have here on the side? We're gonna scan up until 7 a.m. So what are we actually looking for on 7 a.m.? We're actually looking forward to see the price moving lower then going higher, right? Okay, let's test and see if that's here. Okay, wait, this is 7 a.m. What did I say about the price moving lower so that like I can actually take advantage of it moving higher, right? We have this here, right? This is 7 a.m. The price went lower, then the price went higher, went lower again, went higher again, right? What do we have here? We have this fair value gap here. It's wide, I know, it's really wide. We have this fair value gap here. Look at the bodies of these candlesticks, right? How does it respect this? Perfectly, respected perfectly. It just close below it, close inside it, so that like that's how we actually know that we're not gonna go any lower, right? Because the bodies are actually respecting it. What do we have here? We have this here, fair value gap. We have this fair value gap here. What else do we have? we have this here, fair value gap again. What happens on this fair value gap? We have this fair value gap, the price take off, go higher. We have this fair value gap, go higher again. Is this not enough for you to actually meet your ends meet? Is not is that too much to ask for? What do we have here? Fair value gap. Guys, I'm really tired. Maybe if it was during the day, maybe I could have really appreciated it, but now because it's like this and I'm just tired as well, I don't know. I just don't know, man. I think we're gonna I think we're gonna stop here. This is the point where we actually stop. So let me see these things. This is the point where we actually stop, guys. So it's gonna okay, I don't know what's going on here. But either way, okay, yes, I think this is it. Either way, I'm good. So eyeball. This is not actually what I actually ordered and said. I wanted because I wanna see the time thing. Yeah, what's going on here? I think OBS is just doing its own thing. But I'm gonna close the stream here right now. So I think this is it for today. We're gonna see maybe tomorrow after the New York Open, around 9:30. I think that's around in South African time. That's around 3 p.m. I think it's around 3:30 p.m. So I think we're gonna see the price. We're gonna be looking at the price from that point. Yo, I'm really tired, guys. So I'm just gonna stop the stream now and maybe I should rest or something because this is. But thank you for watching and thank you for tuning in. Don't forget to subscribe, like, share, and comment. I would like to hear from you guys. And I would like to see how you guys look at the charts. I'm a student of the game also as well, so I like to learn from others. So if that's the case, then I think we're gonna be good to go, guys. Bye.